Low Face by Kevin, Glenn, Hardianto, Chris Williams. I'd also like to welcome our trading warrior brothers and sisters viewing us from investing.com. How's everyone doing today? A big Thursday. I'd like to start off by acknowledging the team and their accuracy in the markets. Our CEO, Blake Morrow, on Friday saw the euro and confirmed it on Monday that it was going to head down possibly to 119. And then again yesterday, he had it drawn as a flag. Looks a little bit more like a wedge to me. I'm not sure how he had the bottom line drawn, but he said this was just a continuation formation and that we should go to 119. He wasn't sure he'd buy it down there. It was important not just it getting down there, but how and why. So I'm going to be looking forward to what Blake is saying about the euro. He also top picked the gold last week. Stelios has been bearish euro pound. He was a little early, but it's come home in spades. Blake's been bearish euro pound. Steve Volge's been bearish euro pound. So it's been a big trade for the community. It's been a big trade for subscribers. It's been a big trade individually for our team. Congratulations, ForexAnalytix, on, I think, the best team of great traders, great trading minds, great analysts coming from different views of analysis, right? Elliott Wave, Harmonics by Nick, Basic Technical, which is excellent technical by Blake, and Candlesticks by Steve Volge. So really, an outstanding team collaborating every day, working hard every day to get the push alerts out, the patterns in play out. And I recommend that you consider at least trying the trial, taking the trial for $1. It's the best buck you'll ever risk if you're serious about becoming a successful trader. I don't want to take up a lot of time. Nick's going to be with us today, and Greg may drop by too. But there's another element I'd like to talk about. You know, I sing the praises of the ForexAnalytix team every day, but we also have a very powerful element in our community. In fact, viewers at investing.com, we call this FACE, which is an acronym for ForexAnalytix Community Experience. So part of that experience is having a community. And people within the community help each other outside of room hours, a lot on Twitter. We're going to be opening up our private room in the next several days where you're going to have 24-hour access to people depending upon where they're located on the globe to collaborate and share great ideas. But I haven't done this in a long time, but Chris Williams tweeted me and said, you know, you should give a shout out to Hardianto. Hardianto, are you here? Because before this move by the BOE, the Bank of England, he prepared people for a buy that it was, he had it diagnosed as a wave 4 and got long at 170 and cleaning up. So I used to do this a lot more often in prior rooms and prior places on my journey I've been, but today at Trader_Hardianto, you're the man, and I'd like to acknowledge you with playing the Face Award video for you, because outstanding call and helping others, help lift up. I'm here, buddy.
Okay, I was going to say that was really nice.
Huh?
I was going to say that was really nice.
Thank you, buddy. Well, great calls again. You had this initial wave in the dollar diagnosed very well, Blake, from the top, from that little continuation formation, euro pound home run ball. You know, I may brag about ForexAnalytix, but it's not just because I work here. It's because of, you know, the talent. You know, I've been around. I've interviewed 700-800 of the best traders in the globe, and this is the most powerful combination of analysts I've ever seen in my career, and my career has not been short. So well, nice work, buddy.
Well, thanks, and I don't deserve all that credit, but I mean we have a good team, and we've got a great team, and we got even a better community here of people that like to contribute to what they're looking at, and that's what it's all about, is just making sure that everybody's kind of seeing the same thing, and we can capture the gains together. We kind of sulk in misery a little bit in some of the losses, but overall, we try to do good and do good for the community. So thanks.
Yeah, it's a good work. It's definitely, it's a biblical principle, Blake, that you reap what you sow, and there's plenty of good seeds that we plant every day, that the community plants, and as you can see by the numbers, there is growth in our business and our community, and I'm a big believer in that you do good work and you serve others, and that's how you lead. And I think that our model does that every day. I know it's my mission statement to build up and edify traders every day. I know it's the team's mission statement too.
Yeah, it really is. So I don't want to cut that short because that's what FACE is all about. But we do have some really important data coming out in about 20 minutes, and I want to make sure that we've got good coverage of that, because we have inflation data, which it's funny. Yesterday, the producer prices came in worse than expected, yet the dollar still rallied. Now, when you throw bad data, or bad data in this case, or bad news at the market, and the market still goes in the opposite direction, that's usually a pretty good sign that like in this case, the dollar is very oversold, and we've been talking about that for days. Now, one of the things that I think we should all be looking at right at this moment in time is the euro dollar sitting here at 119. Look, I told you guys yesterday it's probably going to go down here, and I wasn't sure if I was going to be buying it down here, and I'm not. But I'm going to tell you, I did try to buy it yesterday. I played it a couple of times down here, and basically got out for scratch, just kind of trying to play it off of this support, and didn't really make anything. And I still take a look back and go, okay, well, do I really want to be a buyer of the euro right now? The euro's trading heavy, and you constantly talk about the euro pound and how that helps guide you in the euro. Well, it helps guide me too, and the euro pound's just gotten decimated. I got so lucky on this Bank of England decision. I had an order sitting to sell the pound, euro pound, excuse me, at 90.35 right here.
Nice.
So, yeah, I had an order just sitting out there, and I got tripped, and then obviously I closed it, down here. So I got in and out, and I was like, dude, I was done with it. It's really nice. It was a
100 pips in less than an hour.
Very, very, yeah, it was like in like 20 minutes.
Nothing like immediate gratification, Blake, but that's the exception, not the rule for you, isn't it?
That is not the rule, and it is definitely doesn't happen often, and I definitely don't get that lucky that often. But it was, yeah, but everybody knows I've been shorting the euro pound quite aggressively. We blogged about it.
That was a great blog.
Thank you. So I've actually made quite a bit of money this week in the euro pound. It's made my month. I could actually step away for the rest of the month and be happy with what has transpired thus far. But that doesn't mean that there isn't more downside here. I thought we were going to stop at this 618. That's why I closed out my position, because we were right here. Right here, and I said, that's probably going to be it. But as you can see, we've continued lower, and I'm trying to sell rallies, but I haven't seen a rally yet. So I am going to sell a rally on any move in the euro pound if we get it higher. But let's talk about why that can happen. Now, the euro pound, I had to adjust, and if you use ForexAnalytix, you'll notice right here we have a bull bear line. Bull bear line is while we're above it, or if we're above it, we're bullish. If we're below it, we're bearish. That's all a bull bear line is. And the reason why I had to adjust that today is because, and let's go over to the pound dollar. We're at channel resistance here.
Yeah.
Now,
we've been talking about that for a few days.
Yeah, and I mean, it rejected us yesterday. I mean, you can see how we rejected up there yesterday. Obviously, the Bank of England pushed us right back up there with all these improved forecasts. But the bottom line is we're up against resistance. Now, you might be asking me, well, Blake, are you going to short the pound? Hell no. Okay, so just let me make sure I get that clear. I am not shorting the pound dollar. That's not a negotiating point with me. Like but if I was long the pound at this point, which I'm not, I'd be not only booking it, or I'd be moving stops, I'd be taking profits, I'd be just doing something proactive, because what we saw yesterday is something that could very easily happen today. Is you break out, right? Yeah. You break out and then you get a false breakout. Well, what's to say that doesn't happen right here? Right there, because
well, there is a technical reason why it might, Blake. I'm sorry to interrupt you, but your Elliott Titian, Grega Horvat, and a lot of guys that trade Elliott were buying that pullback as a wave 4, with one more wave to the upside for 5 to happen. So I'm not yet like you. Who knows if 5 is done? But this is potentially a terminal rally up here to this resistance.
Yeah, and it could be, and I mean, because you look around at the dollar, and we look at the dollar and we go, okay, well, here's the dollar right here trying to make its way out of this channel. Now, I don't know if I might have drawn it wrong. We never know while I adjust trend lines all the time. I mean, it's technical analysis is not an exact science. I always tell people that. If it was, we'd all be gazillionaires. So, sometimes you got to make these adjustments. And, you look at this channel, in the dollar, and we're knocking our head right up against channel resistance. Well, how about if we break out? If the dollar breaks out, that's not going to put the pound dollar at 135. It's going to put the pound dollar probably at 131. Now, the euro dollar could drop to 115 and the euro pound can get smoked. That could all still happen, and the pound could really outperform its peers. But regardless, I think you have to be a little cautious at this point in time with what you're doing, even in the pound dollar. So if the pound dollar is up against resistance here, if the dollar breaks out, the pound dollar is going, it's gonna go back down here. That highlighter doesn't work too well. Let me erase that. That pound dollar could go all back down here, even though the euro might completely crap the bed. The pound may just outperform it, which I think is going to be the case if the dollar breaks out. Now, we have this data coming out today, and will the dollar break out today? It's very possible. Inflation, even though producer prices yesterday came in worse than expected, everybody still bought the dollar, probably thinking that with the recent batch of tropical storms and hurricanes that have come through, and crude oil's rallying, we're gonna see some inflation coming down the pipe. Excuse me, that seems like more of an assumption at this point, but the dollar is at risk of breaking higher. You look at the dollar yen, for example. I mean, this dollar yen is right up against whoops, where's the dollar yen? There it is. Here's the dollar yen right up against.
Steve Volge said it would take closes over 93 in the Dixie for him to be convinced. That still hasn't happened. So Steve is a great one for having the discipline to wait for major confirmations before he puts capital at risk. So
he definitely looks for confirmation. He's way more conservative, you know, as far as looking for the levels. But when he finds them and they're confirmed, you know, that's usually a pretty good indication that
he has like the patience of a saint. Like he's like, you know, Saint Steve.
So and so this is what he's looking at. He's really looking at this move above like 93 and waiting for that confirmation, which in my opinion makes a lot of sense, because we could spike up here and fail today too, but some daily closes I think above 92.50, above 93, really going to confirm this turn in the dollar. And will we get it today? I don't know. You know, consumer prices and inflation is going to be the key driver, I think, for the dollar here in the next, couple of weeks. So, you know, we'll be paying very close attention here in the next 13 minutes when the data is released. There's another currency pair I'm very interested in at this point. Is I'm interested in the Aussie dollar. If you're not following the Aussie, we're following up this, like, this is very similar to the euro dollar. We're following up this nice upward sloping trend line here, and really critical support we're about, I don't know, about 30 or 40 pips away from. And if that breaks, I think we've got to be on guard for potential, you know, swoon lower in the Aussie, and especially given the fact that we had a nice false breakout just from this last, you know, think about how many people got long the dollar, or excuse me, long the Aussie, and this is on Friday. They got long the Aussie on this breakout. All the shorts got squeezed, and now, you know, now you're at risk of a big move in the opposite direction, should the dollar really start to strengthen. So the Aussie's on my radar at this point. Obviously, the Canadian could recover a little bit. I still would be very bearish. I am very bearish that the dollar Canadian. As a matter of fact, I have orders to sell the dollar Canadian at higher prices. You know, and this shouldn't be any secret to anybody listening in right now, that while we're below this blue line right here, and look, I'll change it really quick and I'll make it dotted. While we're below this dotted line, or dashed line, I am bearish the dollar Canadian. And so like I said, any type of rally at this point, any type of rally back up to that trend line, I'm going to sell. Now, whether or not we get that or not, I mean, that's to be seen. But if we get some dollar strength today, we might go up and see 133. And it's entirely possible that we go up and see 123, you know, later on today or maybe tomorrow. Okay. So anyway, that's just something that I'm paying very close attention to, the multi-year trend line there. There's these Nordic currencies that have been beat the hell up. You know, the U.S. dollar, Norwegian krona, the U.S. dollar, Swedish krona. Those two particular currencies, they could really start to show some signs of life. Should we see the dollar break out? I think that's entirely possible as well. And
you were there Monday, buddy.
Yeah, you know, playing the U.S. dollar, Norwegian krona, you know, I made some pretty decent money on Monday, but I've been out of it. You know, I'm not playing it long at the moment, but it is something that I'm considering again at this point in time. So let me see. What else have I been looking at? Euro pound again. I'm gonna look to sell rallies here. We got the exact move that we were looking for. This is, and by the way, let's also note right now at this moment we are at. You see this? This is the 38% retracement. We are at the 38% retracement right now. This is probably a great opportunity to take or book profits on any euro pound shorts. You know, I'm looking to resell it. I think we're going a lot lower. You probably read in my blog that I'm looking at, you know, down here. I don't think we're going to go in a straight line. So let me redraw this stuff. and I'll just show you what I think is going to happen from here. Let me undash that line. That would be my new idea of what I think is going to happen from here. Will it? I don't know, but I like to envision the way I think things are going to happen and trade them that way. So I develop some sort of plan, and then I trade that plan, and that's how I see it right at this point. That's how I'm viewing it. Let's see. Anything else that's on my radar that I can think of? The Australian jobs report was really strong. The Aussie New Zealand is bounced again off of this major trend line here. It's still very bullish. If you use
pattern in play.
ForexAnalytix, and I still have the pattern in play in there. And one of the things that I guess I'll just revisit this one really quick. You have to go back and take a look longer term. The reason why I'm playing this Aussie New Zealand to the long side, we are still above, at this moment, we're above a multi-year trend line. This is a since 2011 tag, we're all, and we're being capped by this trend line here. It's another trend line that's capping us at the moment. But yeah, once we clear like 111.50, then that opens up a move to 114, 115. So, and I'm still playing this to the long side. I'm still, I keep buying dips down at 110, spinning out of it for 30 or 40 pips. But longer term, I still feel that we're going a lot higher. So I will only continue to play this one to the long side at this point. Now, a couple other things I want to point out is we have some really bullish moves in these yen pairs. If you look at the pound yen today, this pound yen is coming up to major resistance. I mean, if I was long, and I'm not, if I was long, I would be tightening stops at this point, because you can see on the pound yen how many times we've rejected this resistance, and we've come up and we've rejected the 148 level so many times. 148.20, 148. Now we're probably going to break out at some point, but wow, the dollar yen just took a nosedive. I don't know why that happened, but did some news come out? Wow, the stock market is getting crushed right now. What the hell happened? North Korea said to show signs of missile launch prep. That would be it. Yeah. That would be it. Okay, well.
And Dennis Rodman hasn't gotten there yet.
Dennis Rodman has not gotten there yet. So you can see
they're buddies. They're buddies.
Oh yeah, total buddies. So you can see the dollar yen just spiked down on that headline. So
buy gold, buy gold.
Oh, and gold, and there's Nick. Hey Nick, how's it going? And hey Stelios.
Hey, sorry to interrupt.
What's that?
I thought I'd just bomb your show. Sorry.
No, it's all good.
Yeah, don't wait to buy gold. Buy gold and wait, right, Nick?
I love Dale's play on it. That's great. Yeah, so that's a pretty big. Let's take a real quick look at the signs of missile launch prep. Another missile launch, but it's all just a warning. But you know what? Here's the S&P. This is what if you're trading equities.
Yeah.
There you go. That's it. We get below. We drop another couple 2-3 points. Then you need to start thinking, okay, I've got something to worry about here. And we're just a few minutes. We're just a few minutes from news. Stelios, I heard your voice. I'd like to hear your thoughts on the euro pound really quick, because I know you've got a long-term bearish outlook on the euro pound, and we saw that you adjusted your pattern in play to an invalidation point at 91 pence. You have any comments for a few minutes before this news comes out?
And Blake, before you go, if you just show the Aussie chart false breakout, I just have a little coaching tip for people.
Oh yeah, sure.
Because we've been getting a lot of false breakouts. So anyone that bought that breakout did not wait for the candle to close, okay? You don't know what kind of candle you're going to have until it finishes. So it broke out, it was a stop on, closed back underneath it. So again, important to wait for candles to close before you know if you have a breakout.
It's true, and that's a good point.
Yes.
That's it.
So yeah, hey Dale, hi everybody. My views on Euro Sterling, I think people know them already, but I'm bearish. I think that things are slowly changing everywhere, but in the Bank of England in particular, they, you know, Carney is like the, how do they say it? The boyfriend who is, they have an expression where he says one thing, then he does the other thing. But I think now we're getting closer to actual action. So, and if you think about it, the two big problems for the UK, I've said it before, is all the uncertainty with Brexit and the lack of growth. Actually, not the lack of growth, but earnings growth is lagging real actual inflation. These are valid points, but I still think that the 15% depreciation of sterling since the referendum is way too much. The economy is still doing well. They have to start reversing slowly some of the stuff they've done. Rate hikes, reducing balance sheet. I don't know how they're going to do it, but they have to do it. And I also think that there is a decent chance that Brexit negotiations are going to start eventually to yield some results. Because at the moment everybody's saying, oh, the UK have no idea what they're doing, they're not prepared, and the Eurozone, the EU, they have the upper hand on negotiations. Well, at some point we're going to see some kind of result, whatever that is. And I think sentiment is already changing, and I think when that happens, that's going to be the final nail in the coffin. I think it's really going to start going. And
so when you're talking, and I agree with you as far as the Brexit negotiations, but when you're talking inflation, I mean you've been ahead of the curve here, and we're seeing all these inflation forecasts rise as of today, right?
Yes. I mean, we are, and they have said in the past they will tolerate a little bit of higher inflation, but slowly some members, and I think the general consensus is that, okay, they can tolerate a little bit of higher inflation, but if it goes above 3% and it looks like it's going to stay there for a bit, they have to do something. That's their mandate. They have to do something. So I think that they're going to be less flexible this time around. And also we have to remember that there are the Fed, the Bank of Canada, we're seeing some rate hikes here and there. It's not going to be the end of the world for the UK or the housing market if they hike a couple of times. It's not like, you know, people are going to suffer on their mortgages. Obviously, they're going to have higher mortgage payments and all that, but it's not going to make a groundbreaking change.
Right, and we're dealing with the same thing in the United States, very similar, right?
Exactly. And the reason I changed my invalidation level and my personal stop loss to 0.91 is that if we've gone far enough now that if we go back towards those levels, it will mean that something has changed, something quite material probably. I'm going to wait and see, you know, the data and everything that's happening, but I'm sitting on this at the moment. I'm very confident. Well, I'm quite confident about it. So, and I like the trade.
Well, okay, so that makes a lot of sense, Delio. So thank you very much. Now, speaking of data, we have data coming out here momentarily for inflation data. So let's pay very close attention. Dollar yen is spiking higher. So we have a higher inflation. That's going to be bad for the stock market, even though the dollar yen is spiking up at the moment.
1.9 versus 1.8 expected. Yes, Blake.
Wow, that's I mean, inflation is just on a tear, and like I said, stocks are not going to like that.
Look at the yen.
I know the dollar yen is spiking higher. I mean, we finally broke higher. I mean, look at that.
Yeah.
And this is after that North Korea news. So yeah, I mean, look at this dollar yen and look at the dollar.
Bonds.
I mean,
look at the bonds, Blake.
Yeah, I'll go take a look at bonds here in a moment. But man, the euro pound's below 89 pence. Oh my God. Okay, let's go look at the bond market. Bond market should be.
Yeah, that guy Pinkert, I think, said that you know, bonds look vulnerable last week.
Nostra Pinkert.
Yeah.
Oh
You
man,
heard the guy?
I've heard of the guy. I've heard of him before. All right, guys. Well, hey, this should be a very exciting trading day because it was a really slow night anyway. So, Steve, I'm going to pass it over to you, and good morning, by the way.
And Nick is here.
Good morning, Blake.
And Nick-
Let's should we pass it to Nick? Nick, you want to speak now, later? What do you prefer?
We've heard enough male
You
voice.
say hi, and I'll go after you, don't worry.
Okay, Nick. Okay. Hi, everyone.
Hey, Steve, great call on being patient on pound Kiwi to go to the 61.8 level. You talked about it yesterday.
Yes, and
Are we there?
speaking of the pound pairs, I need to show you some more stuff here quickly before Nick takes over. First of all, we were monitoring at the pound CAD because it had developed a descending wedge. We broke above it, and we're now, this is exactly what we had designed back then, that, you know, first bullish step for the pair will be to break above the wedge and test the descending channel. It's doing so as we speak. And the second step will be to actually close above the descending channel. And if you even see, there is also like a little very nice horizontal support resistance zone that's around here. There it is. So as you see now, we have the confluence of this zone and the channel. So honestly, a close above 163.30, 40, call it roughly, I think is definitely going to add here the final verification we need that all the evidence that was mounting up here, like the RSI divergence, the candlestick we got last week down here, the break of the wedge. So one by one, we're seeing evidence that this market is turning. And I think the close above 163.30 is actually going to be, you know, the last piece of evidence we need that we're going to see, you know, a bigger bounce. I'm guessing that the next target is going to be at 167.30 here. As you see, it's the 200 DMA is also just a little bit below it. So I think that the next target is 400 pips higher as long as we confirm this break. So pound CAD, a very, very interesting opportunity at the moment. Pound Aussie followed the same kind of example. I mean, it's the same, it was leading, it's the same kind of trade. Why? Because it first developed a descending wedge as well, as you see here with the intermittent blue lines. We had already indicated the descending channel. We broke above it. Today, we retraced back exactly to retest the channel. If you remember, we talked about it yesterday, and I drew this little line here saying that any move back to this is going to be a good opportunity to be long, and that's exactly what it did. And it's now even about to penetrate through this resistance zone and actually for the first time develop like a higher high after a very long time. So this is already underway, and the pound CAD seems to be just one step below it. Obviously, because we had indicated that in time, the first one that did the move higher was the pound Kiwi by breaking this this range that it was holding for a long period of time, which was a 500 pip range. And with today's acceleration, it's probably proving that this is a new impulse higher and not a correction, especially if we close, you know, near the highs. So in this case, I would expect definitely the move higher to resume to new highs. Okay.
Can everyone see Steve's screen? Ash left because he couldn't see it. Give me a Y if you could see the screen. You know, sometimes it's just an individual community
I
member.
can see it.
Okay, great. Oh, not seeing anything. Kevin heard. So when that happens, guys, log out and come back in. Sometimes it's your internet and not ours. So
yeah, or perhaps, you know, some kind of glitch with the platform, because we are using a professional platform to broadcast. So it's not our software, you know, it's Citrix software.
although I do see some black dots on top of the screen that keep popping up. You know, like the image is breaking up a little bit.
Okay.
On my screen. That could be my laptop. Who knows?
Okay.
Okay.
So I think we visited now all the pound pairs. I'm not going to go over the usual. I mean, we've already seen both Blake and Stelios talked about the euro pound. Now, the only thing I have to say about the euro pound, if you remember, Dale, I had said that once we break the ascending channel, my first major target is the 88.70. So we're actually right on top of that support at the moment. So honestly speaking, you know, I was thinking of offloading some of my shorts here when we tested the channel, but I never even had to consider it because we closed above the channel and the next day we just sliced through it like it was butter. So, you know, I had no reason to even consider it. But being honest here, you know, I've been, if you remember, short since the highs. So I think this is a decently good move and I'm probably going to book something today. I don't know if it's going to be like 1/3 or half of it, and I might re-add it, you know, if we get a rebound. But I think I'm booking some of it today. I'm going to wait to see what the close of the day is going to be. And
great trade, Steve, and very good patience. You know, I call you Saint Steve now because you're patient.
Thank you. So I think everybody, you know, wanted to know about the pound pairs, and I think the vast majority of them, and remember what I said, the pound Kiwi was leading the pound Aussie. The pound Aussie seems to be leading the pound CAD. So I think there are still opportunities with pound crosses out there. Okay. Now, Nick, you want to take over and show what you need to show because you're not here every day. I mean, I can go over tomorrow, you know, everything else. So why don't you go ahead and show us, you know, from your harmonics magic, you know, what do you find mostly interesting in the markets? I just gave you the presenter.
Here's Faces Diamond, and diamonds are only formed under pressure, and Nick can take it. She's one tough cookie in my book.
You're on a spree today, Dale, right?
Huh? What can you see from my screen?
The connect to go to webinar page, Nick.
Yeah.
Okay, I don't know how. Just let me change it.
You know, what can I say, Steve? I'm a ham. I like having a big audience.
Can you see my chart yet?
No, we can see a blue screen
see a
now.
Blue screen.
Oh,
there you go, Nick.
Cool.
Great to have you, Nick.
Hey, thank you. So I'm just going to start with dollar yen. Okay, and I'm going to zoom right out of this dollar yen. Because I'm quite bullish dollar yen. I've been quite bullish since this sort of reversal at 100, and I've been looking for an ABC correction. And I was thinking that we could go all the way down for that to 104, because at 104 that's also the 1.618 of this ABC corrective rally that we had from April to July. So this one here. But in fact, what we've done is we've stopped at the 0.618. So this first swing lower is
nice.
This swing lower that we've had from July high is 61.8 of the first swing lower. So in Elliott wave, they'd say that was a C equals 61.8 of A. So potentially this is a bottom in dollar yen. You know, we've reversed a few trends now on the daily. We are now making higher highs on the daily. So this is quite, for me, a big deal reversal if we go high enough. Well, you know, very often with these, like if you're going to stall, the standard in a correction is 50%. So I'm going to put 50% of this high to low on, make this a bit darker.
We're going for that A high long term, don't you think, Nick?
Sorry, I think it's going to go high. I don't know. You never know with corrections whether this is the first leg of the zigzag or whether the correction is complete, right? So this might just be a bigger A, and then we do B, C, and another big low, or you know we might just get to here and then carry on lower in like a descending wedge or something. I think we've gone a little bit too high for that, but I'm open to it happening. So a couple of things will negate that. I'm going to draw a trend line from this high, and so this trend line and this 50% now line up together. And you know, trend line, third touches of trend lines, you very often see false breaks. So I wouldn't be surprised to see a false break above the trend line if we get there a bit slower, a false break maybe here to 11304, and then if we're going to fail, that's where we're going to fail. So at the 50%, and if we're going to keep going lower, I think that's where we'll go lower. And if we get above that, for me, that confirms the bullish reversal. Maybe then we'll stall here at this 61.8, freak everybody out a bit. We'll come all the way back to the 38.2, and then, but that's what I'm looking at for a bottom in dollar yen. And of course, if that does that, then that's pretty bullish for all the other yen crosses.
And
what I like about
bonds, and very bearish, and gold.
Well, I'm very bearish bonds.
All right.
I've tried not to be, but I'm very bearish bonds, I'm afraid. So I am very bearish bonds. But the other thing that I was going to talk about is this dollar index. Isn't this dollar index hard to read? Because I see this as a bounce, right? And when you look at that dollar yen, you go, gosh, that might really be the low, low, low in the dollar yen. But this also might just have been, this is wave 1, wave 2, wave 3. Like for me, in a harmonic person, I'm always looking at the bigger swing fibs. And so for me, I really wanted it to 89.92. And the reason for that in this dollar index is I'm going to go to a monthly. I'm going to take that 200 moving average off. So here's the monthly swing that we're looking at. So we reversed from the high in 2001 to the low in 2008, we reversed at the 61.8. And reversals at the 61.8 usually go to the 38.2. So that means 89.92, and we're not quite there yet. What we've done is a bit of a stick save at this previous low, which is, you know, fine and normal. Let's go back to a weekly. So for me, you know, the weekly close below kind of, I think that we'll see a bounce here. I'm thinking if I put the 23.6 on from the high, that would be my bull bear line at 94, a return to 94. And if I look for the 38.2 from the swing, maybe if we go a bit higher, we'll go up to 95.85 or something. Above 95.85, I'll say the dollar index has bottomed. And for now, I think that the resistance on this bounce is probably more likely to be 94. So that's kind of what I'm looking at. Yeah.
Nice looks.
So the pound, you know, I was listening to what you said, and you're so true. How often have we seen false breakouts? Like if you don't wait for the candle to close, then how do you know? And here in this pound, you know, we're retesting a level of really important highs in this zone here, you know, all the way back to December. So every time when we've got in this region, we've met sellers. And so I've had a few measurements here.
Nick, Nick, and they took out all the stops, Nick, over the previous highs. So, you know, that would be classic.
Nick, if I may interrupt, on the other hand, if you see the move from the recent low in the pound yen,
it's very impulsive, isn't it?
Yes, it really looks like a 1, 2 in a triangle. The momentum of this move higher looks like a 3. So personally,
right, and in which case, and you're right. So in which case, and I just undid that. Let me just undo that thing I took off, because if you measure the swings, like I like to do, like this. So if this was, you're right. If this was a wave 1, and this is wave, and we project it from here, then we've just hit this 1.618. So for me, if we keep going here without a pullback, we're going to go all the way to 151. So yeah, you know, I hope you can see that. Okay, so let me take this away. So that, yeah, I would expect this to stall here. I'd expect a 38.2 retrace of this, and then I'd expect a big continuation lower. So 38.2 retrace of this whole swing is not even below today's low. That would be back to 145.42 and then continue higher at the most for a correction. So yeah, that would be very interesting. So
indeed, and the market trapped a lot of people being short.
Very much so.
Because if you remember, we had this ascending trend line that was passing from 3 lows, which we first broke. If you zoom out a little bit on the chart, yeah, okay.
Yeah.
So before you drew the trend line like this, we had a different trend line. Yes.
Yeah,
yes,
exactly. Yeah, I'll
yes.
just do it for you now. Yeah.
Exactly. So.
And everybody got short and then got trapped.
Exactly.
Classic, isn't it? Classic.
Yes.
There it is.
Exactly. That was it.
Because not only did we break this trend line, but we retested it perfectly. So you feel very safe in that. Yeah,
exactly.
I know, yeah. So.
Mean Mr. Market.
Oh yeah. Oh yeah. No kidding. So yeah, I think it does look good to go higher, but I just think it might just stall here, trick everybody. I don't even see today's low going, but I think it might just come back enough to get a few more people short maybe, and then
Nick, any views? Joy is asking about crude and CAD since.
Yeah, I've been long crude. I'll just load that up and let's look at this Canadian dollar. It's still a Canadian. Let's look at the Canadian US dollar. Where have I got it? I haven't loaded up the right pages. This has been a bit upsetting. Sorry guys, we'll just sing a little song while we... So oil.
Dale is good for that. He can start singing.
Yeah, he's got his guitar. Have you got your guitar ready? I have messy charts with moving averages on. I'm just going to clean them up.
There it is.
So here I'm looking at WTI oil. I'm going to go out to 4 hour because it's just a little bit easier to see what's going on. And so for me, I've got a big target at 50.74, and 50.75 was a target for me before. So I am still seeing, I know this is, I'm long term, I'm not 100% on the bull side yet. But if I measure the swings and the ABCs, I've still got 2 targets to come here in crude, and that's so that's basically from this low on the 21st of June to the high on the 1st of August, projected from this low here at the end of August. That gives me 2 targets. If the second swing is 61.8, I'm looking for around between 50, 60, 50, 70 for an AB 61.8 of ABC, and then for I've got a harmonic pattern if we can make it to 53.79. That's what I'm looking at. So I'm looking at continuous crude oil prices as well. So if we get to here, this is a Gartley pattern here around 53.79. So that's what I'm looking for if we get past 50.74 today. I think we'll probably stall here a bit, but the second target is definitely doable. A lot will depend though on the dollar. You know, the oil's very good at ignoring the US dollar strength, and then all of a sudden it goes, I don't think I like this, and then it'll reverse. So that's why I'm looking at
Chris, by you know, a trader friend of mine, that you had a buy signal, I believe it was 24 hours ago in crude. We had some moving averages confirming the move to the upside around that 47.5 level.
Yeah, definitely. I had a really nice 4-hour buy signal yesterday.
That was
the day
it.
before.
Nick, I had a bullish bias as well since we found that low, and I said that as long as we remain, you know, above that 45.5, whatever it was. But you know what I found quite unexpected? You know, 49 was a very, very key level for me, and if we close above it, my personal target is 51.5 to 52, to be honest. But, you know, I'm looking at it from a different perspective. But what I found really amazing, and I didn't expect, is the fact that we actually sold off on a Friday, especially given
that
the
was
fact...
very weird.
Yeah, very weird, especially given the fact that lately we've had a lot of geopolitical risk, and as you've said, you know, usually, obviously, geopolitical risk, if it causes anything during a weekend, is going to be to give you a gap higher. So I found it extremely amazing that you know, that people actually sold it on a Friday and actually closed lower on a Friday, and that was the only day of the week that actually crude moved lower last week.
I know, very strange.
Yeah, extremely strange. I didn't expect that, I have to admit.
No, I certainly didn't expect it. I wasn't in on it, but so I'm going to talk about Canadian dollar because this Canadian dollar is quite interesting. this was, I was looking again, I'm still looking for lower in the Canadian dollar, looking for an ABC move, just a simple measured move down to 1.16. And that would also...
Nick, you had that target 4 months
I know,
4 months ago.
So boring. Nothing changes. I know, I'm sorry.
Well, no, I mean, and you never, right, it's great it never changed because it's on the way there.
Okay, so, but we can't ignore the fact that these 1.272s are very often they're very often strong bounce levels, they're very often highs and lows, and so this is where we're bouncing from and you can't ignore it. So this is my daily dollar Canadian. So what would tell me that this was a bottom and not coming back? The first thing I'm going to do is put the 23.6 fib from this swing, and that puts us back to these lows and this low. So I'm going to say 124.82 is important resistance, and if we stay below that or we fail there, then we're going to continue lower, and otherwise, then the next, if it goes beyond that, I'm going to put my fib up to the high here, and I'm going to say that these prior highs are up here, and 126.91 is the next resistance. And if we fail there, then so that just means a bigger correction, but only above there, only above 126.90 would I get bullish and give up my idea of one more leg lower, for the same reasons that I discussed in the dollar index. But what I've really liked, I find that the dollar Canadian turns first. It's quite a good canary in that respect. So I kind of like that one. So that's pretty much, you know, I think these Swissy, okay, the Swiss National Bank are still very, very active. You know, I'd been watching the Euro Swiss for a breakout, and remember we discussed, and that's what we've got. And so I've been looking at buying dips in this Euro Swiss to continue higher for another leg higher, but I'm starting to think that maybe the pound is a better, like, look at this breakout. Let's go to a daily of the pound here. And so pound Swiss, you know, which is the alternate of euro sterling, is it trades the opposite. So if you're already doing euro pound, you don't really want to do pound Swiss because it's like the same trade. But I do think that this one has a little bit more oomph in it, just because you've got the Swiss National Bank helping you. So this was the 50%. So this rally, we had a rally of the high to low. So this was corrective, okay? And then we had a pullback to the 50%, triple bottom, and now we're off again. So I'm going to measure from this. So this gives me 2 targets. If you buy pound Swiss on pullbacks after today's breakout, that gives me 2 targets. One is the return to the highs, 130.96, and the next one is 136 up here, 136.76. If we make a bigger ABC correction, so that's what I'm looking for. Sometimes these corrections, you know, I think are easier to trade but yeah, that's how I'm seeing the pound Swiss. I think this is as good an opportunity as, I think it's as good an opportunity as euro pound, and a little bit more beta. So
Nick, I know that quite a lot of people are you know, are still wondering what's happening with indices. So if you want to, you know, give us some harmonics perspective on.
They've just gone so far in a straight line, you can't really draw. They're so bullish. I'm still really bullish. I think that
same here actually. In the short
there is no nuclear missile that can keep the stocks down, it seems to be. But you know, I'm sure when everybody thinks that's what happens. And you know, historically, seasonally, like, this shouldn't be a good month, really. It should be a pullback month.
What is
we're not in.
Should I Google it?
Yeah, exactly. You know, nothing that lasts more than a day, really, is it? So, I will say though, if you really want to short something, you've got to short the FTSE. This is the FTSE. It's gone sideways, 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 sideways. The strong pound really hurts the FTSE. Really hurts the FTSE. They're all international companies in the FTSE 100. They're not UK companies. So they earn their money overseas and then it gets converted into pounds, and this is what happens. So this, look at this, this has been, you know, really quite important support. This is just an hourly, I know.
Yeah, because of the pound rally, Nick, I canceled my Rolls-Royce order because it went up a little bit too much for me, an extra 50 grand.
You guys in California, you love your Rolls-Royces, don't you? You and Paris Hilton.
Same thing happened to me, Dale, but it's an Aston Martin in my case.
Okay, so this is a daily of the FTSE.
Boy, it looks heavy. Heavy.
Yeah, it does look really heavy, lower high. So where are we going to go if this drops, right? I always remember at the 23.6 fib.
7.1.
Let's mark it in bright red so we can see it. Like this. And there it is, yeah. So 7.094. Look at this pivot level. That's got to be like a magnet calling out of the FTSE. So if you really want to short an index,
also
this
potential for a big head and shoulders formation.
Yeah, well, everyone's going to be saying that when we get there, aren't they?
Yeah.
So 1794 in the FTSE, the 23.6 retrace from the 2016 lows looks like a big magnet level to me, and I'm really interested in that on a break of this support level. So sell the FTSE. And the other one that looks exactly the same, believe it or not, and I wonder if I've got a chart here, is the ASX 200. Take a look at this one. Let's take a look. Look at these tight bunched up moving averages before I move. And here's the daily of the ASX. So looky, that looks just the same, doesn't it? So, and we've bounced off a 1.618. So if this is an ABC, this was a 1.618. Perfect ABC rally on the daily in this ASX. This, you know, when you see a wedge like this with really tight consolidation, when they break, you get really powerful moves. So I think that this ASX is quite exciting. So I'm going to take this away, take the 1618 away because we don't need to see it. We know that we stopped at a really good level. So I'm going to put this on so we get two. So this, the support in this ASX here, let's take this one away as well. The support you can see is the 23.6 fib that I blab on about. Okay, if that breaks, then the first target is obviously going to be 54.62, which is the 38.2 retrace, but I think more likely that we continue lower and we come down to the 50 at least, because ABC corrections usually retrace at least back to 50% if we're going to do another one and go higher, and so that's 53.09. So if you really want a shorter stock index, the ASX 200 or the FTSE 100 are my favorites, and not the S&P that's at all-time highs. So, yeah. We could even put a nice trend line in this ASX, couldn't we? So I think that those are really interesting. And so look, the 38.2 and this trend line will line up together.
You know, that kind of lines up with what Martin Armstrong told me a few years ago. He thought that Europe would go first, then Asia, and then the last man standing is U.S., S&P.
Yeah. Wow. Yeah. Well, you know, the USA is just doing much better than people think, you know. Just I don't know why they don't get rid of the
Nick, I don't think as good as the stock market shows.
Oh, of course not. The stock markets, you know.
Because if we take into account what the stock market is currently pricing, it's like unicorns and, I don't know, conquering new planets and I don't know what else. So, you know, it's not about how well the US is doing, is if that's actually accurately depicted in the prices that stocks trade at. And I think that, you know, everybody that is sane enough would agree that we are above a full-priced stock market, way above a full-priced stock market.
Yeah, oh, definitely. I will say something about this DAX while I'm here, harmonic pattern-wise, no, not fib-wise. The DAX loves the 61.8 retracement. It just loves it. Even if it doesn't reverse there, or it just it doesn't stop it, it will always have enough of a reversal there that you won't lose money if you trade it. So here we are at the 61.8 of the entire decline in the DAX, where if you reverse at the 61.8, then the 38.2 is usually where you return to in these prior highs, and the 50% is the pivot in the middle. What does the pivot in the middle? It means we just might bounce before we get down. If we go up, then we'll bang our head on it a bit before we, you know, and if we're going to go lower, we won't even do that. We'll stop at the 50%. So that's how I see that DAX. The DAX is at resistance as we start today. Does that mean the FTSE is going to stop here and the S&P? Maybe. The S&P for me is kind of weird because we're at new highs, but it didn't continue from those new highs. You know, when you see a market go to new all-time highs, you really want to see the buyers come in and buy it and continue to push it higher, and we haven't seen that in the S&P. Instead, we had 2 days of really tight range sideways, and that's usually a bit of a warning that we need more of a dip to entice the buyers in. They don't want to buy it there. So I think that that's what we're going to see in the S&P and the DAX as well. So,
great looks, Nick. And you know what's interesting? You know what's interesting, Nick, is that so many people are more bullish Europe than the U.S. right now. And, you know, S&P's at new highs and DAX at 61.8 and FTSE on the verge of a breakdown and ASX. You know,
these weather disasters and stuff are not bad for the economy, and it brings lots of money and spending. People have to rebuild and rebuy, and so that kind of economic activity isn't necessarily bad for stock indexes. Nuclear bombs are bad, but I'm not sure they're going to hit us. So
yeah, let's hope not. Anyways, it was great hearing you and seeing your harmonic work again today, Nick. And if you have time, it's time for my interview with Lauren Scherer. And Lauren, I see you. And
hi, Lauren.
I'm going to make you the presenter. And we look forward to hearing your voice and seeing your screen. And this is my first interview with Lauren. So how are you today, Lauren? And welcome to FACE. Should be self-explanatory. There you go. There's our Twitter feed talking to each other. Hi, Lauren.
Hi, can you hear me?
I can hear you loud and clear. Thank you so much for taking the time out of a wild day in the market to join us.
Yes, it's a wild day indeed.
It's very nice to meet you. I found you on Twitter, and I see that you have a website under construction. You're a husband and a father, and you're a gardener. Maybe you're like Chauncey Gardner in that movie. I think it was called Our Time, and he said there would be growth in the spring. So I'm interested in how you got started in the trading business and what it was like for you at the beginning of the journey. That's usually the most dangerous time for people when they come into the market and think that it's going to be easy money. I was pulled aside by a veteran when I was getting my seat at the Merc, and he said, "Kid, this is a tough way to make an easy buck." So why don't you tell us who you have to blame for becoming a full-time professional trader?
Yeah, thank you for the introduction, and thank you so much for your invitation. I'm happy to be here. I'm happy to meet you. So as you said, I'm a father of two. I have many different interests like gardening, etc. My journey in trading began some 10, maybe 12 years ago when I was even before I was at the university. I was studying science in Germany, Saarbrücken, and yes. I started trading already as a teenager, trading stocks. So I bought my first stock in 2005. I remember it very well because it was an insurance company stock that lost around 10% in 2 days because of the London metro bombing. I think it was June or July 2005.
Right.
So I bought that stock, and I'm still doing the same. I'm still having the same approach. Of course, over the course of 10 years, you learn a lot of stuff. You try a lot of different techniques, and then you throw them all away again. But at the very beginning, I was always a trend trader who was just waiting for cheap entries. Bought this stock a couple of days later. I sold it again with 15% profit, and that's how my journey began. I was initially I was a stock trader, so I had a watch list of a couple of companies that I knew the companies, I knew the products, I knew the competition, etc. And I just bought when they were cheap, when they were losing like 10, 15, 20% within a short time, and made my short-term profits on them until I think it was late 2007, beginning 2008, when all the stock market started crashing for the first time. So I started after the dot-com bubble, so I didn't experience this craziness in 2000.
Yeah, you had no bear market experience till 2008. Yes. Okay.
Absolutely.
Go ahead.
As you say, I was in a bear market, and then from 2008 on, I just had loss after loss because I was continuously adding to my losing position and increasing risk, and I knew a little bit about hedging techniques by then, and how to use products with leverage, but it was a complete disaster. I lost in less than a couple of weeks. I lost what I made over the years. So I decided to treat trading with a little more serious than I had so far, and I found a couple of coaches or trainers online.
Yeah, I was going to ask you, because I'm looking at your charts. It's perfectly okay to name them. We've all had books or authors or taken courses or had mentors. So yes. That was my next question. Who influenced you?
I've been influenced on two sides. On the currency. So when I was still trading stocks, I was looking at a lot of. I was reading books. The big book from Murphy, I think it's called, the book of technical analysis. It's pretty big.
By Jay Bernstein?
Yes, that's the one.
Okay, yes. Yeah, he's a veteran. Okay.
So that's how I got started into technical analysis.
He was very big on seasonals, and also he had a great expression for what it takes to become a trader. I use it all the time. Do you recall him saying it takes stick-to-itiveness, meaning persistence?
And that's very true.
Yeah, okay. So Jake Bernstein got you going in charting, and who was your other mentor?
I found a team in the US. They're called Trade Empowered. It's
okay. Jason Stapleton, Akil Stokes.
Yes.
Okay.
So they inspired me. They inspired me to look into harmonic moves, etc. And that's how I got started looking at Elliott waves and chart pattern like the Gartley or the bad pattern, etc. I'm not trading these patterns today, but they helped me develop an understanding of the market moves and what it actually means when you see different ups and downs of different lengths in the market, that they can actually mean something, or that we can try as a trader to interpret some meaning into it. So they definitely did influence me. I think I found them like 5 years ago when they just began becoming a little bigger. And on the stock market, I'm listening a lot to Todd Gordon, who's a former hedge fund manager. He's also, like you, a CNBC contributor. He's trading options, and of course Tasty Trade. I just like the idea of selling options, collecting premium, using defined risk options like credit spread. Or vertical spread, depending.
Wow, you do it all, buddy. You do it all. Yeah, Todd Gordon, they call him Flash Crash Gordon. So, so we're looking at cable here. We've had a huge move. I'm interested to know why you think certain things on your charts are important. Why don't we start off with how do you use RSI? That's something that I use quite a bit. Why is RSI important to you, and how do you use it?
Sure. I actually don't. I don't use it in my trading as an argument. I use it for confirmation or contacts. So what I typically do is take an RSI 5 period or 7 period, so something that's really fast and sensitive. And I'm just looking at the evolution of the RSI, not so much the value that it has currently.
So are you talking about you're looking for price and RSI to confirm, or you're looking at potential RSI momentum divergences?
Yes, I'm trading very discretionary, meaning that my approach is trend trading. So I'm looking for breakouts, for instance, on the GBP USD. You can see the lines that I've put in are breaking minor or major swings, and I would just wait for a high or a low for the price to close over or under a high and a low, and then buy on different arguments the pullback. And the arguments that I'm looking at is candlestick pattern and support and resistance. Like here is a typical situation for me to buy this close above the swing high. So in this situation, I would change as soon as the price pulls back into a minor support. I'm changing time frame. I'm going a little lower and look at the price movement on lower time frame. And if I can see some arguments that traders are coming in and pushing the price higher because on lower time frame we get a nice up trade, or that the RSI went from overbought to oversold and now leaving oversold. These are arguments that I'm looking at, and then from situation to situation I take a decision whether I buy or not. I'm also looking at Fibonacci's, so I'm taking the Fibonacci retracement, for instance, and look if this comes in at the same moment. Here we have the 786, which is the level that I'm looking at. So probably in this area, if on lower time frame there is some kind of price pattern, I would have bought GBP USD in that area. And that's all I'm doing. I'm just looking on the higher time frame to get the direction, the feeling of the direction. Of course, also thinking about the fundamental, like in the, I don't want to be buyer on the long term on sterling with the Brexit terms and conditions not clear at the moment.
So tell us now, that's the past. In this business, you're only as good as your last call. So pounds had a huge surge. I see a little momentum divergence, maybe a 3 driver. What do you think about the pound right here? What would you, right here, right now, what would you do? And, doing nothing is okay. So go ahead.
I actually sold it here, just short of this support, of this resistance, sorry. I saw this double top coming in at this resistance level. This huge big red area is from a higher time frame.
Are they your pivots or just resistance zones?
They're just swing high and low resistance.
Oh, I see. Okay.
Go back to 2009. This is the upper band. In August 2016, this is the lower band of a big resistance area. So I just put it on my chart, so I know the context where the price is currently at. And as said, with the Brexit uncertainty, I don't want to be buying sterling right now. So I was looking for a cheap way to get into a short trade sterling. I sold sterling on this candle here. I saw the double top coming in, the close below this doji. It's not really doji, but it's this star candle. So I shorted here, and I'm now actually hedging this trade because I think that GBP USD will still go midterm. It will chase these new lows. It will fall again. So for me, GBP USD is not a buy, but it's a sell. I sold it here it rallied up. I hedged myself to protect against further loss.
How do you hedge? In a separate account, you get long against your short position?
Yes, I go long against my short position, and I know in the US it's a problem to hedge the same. Here in Europe, it's not. So that's what I do. I in, let's say, 60% of the time I'm right. I'm doing a profit. It doesn't hurt me a lot, and 40 to 35% of the time I have to manage me out of these unsuccessful trades.
Instead of using stops, you just hedge until, and then how do you decide when to lift the leg of the hedge?
I use statistics. I did a lot of statistics in the past to understand if this price moves happens, if this support and resistance, are they respected or not, and then I just use statistics to wait until the price comes into an area where I believe that the statistical chance is higher for it to go down than continue rallying up. I wait for some confirmation on lower time frames. I close the hedge with a loss, and that's going to be the cost of my insurance, and I wait for the price to come down. If it continues up, I have another hedge order that takes in again. So
that's the tricky part, isn't it, when lifting a leg, which leg to lift? Isn't that the most critical part of the whole situation? It's easier when you don't have to hedge, but if you do, making the decision, well, do I lift what I was originally wrong on and stay with my hedge, or do I lift my hedge now that it's covered some of my losses or a majority of my losses and go with my original thought?
Yes, and to be honest, because
I've done it before, Lauren. That's why I'm saying, and at times I've lifted the wrong leg and peed on myself. So I'm just wondering, in those situations, what's a contingency that makes you gives you confidence on which side of the market you're going to lift?
Well, you never know, right? Nobody knows until it happens.
Right.
So I only do it for my personal comfort, because it's hard for me to just let the trade with a stop loss, because it just frustrates me when 5 or 6 trades in a row get stopped out, and I feel like when I'm hedging them, because currencies, that's what I like about currencies, they oscillate a lot around their fair value, so they always coming back some point, and I feel like it's easier for me to manage these losing trades by hedging them instead of just accepting the loss and cutting the loss. But in the long run, in the end game, maybe it will be more profitable to just accept the loss and close the trade. But for me, it's easier for me to continue trading if I know that I'm protected against further.
And that's a personal choice. Jack Schwager says, find a trading style that suits your personality. So I think you diagnosed it. It was you still feel alive being in the trade because you're hedged, whereas taking a loss and reassessing is completely different psychologically. It's like, you have to reassess and, think about what you did wrong. Here you're still in the game and your original scenario could play out, and you ended up, maybe you end up a lot of the time being right the market, wrong the trade, but you ride out being wrong the trade, eventually you right the market and it works out for you. It's interesting.
Yeah,
if you can do that successfully.
Absolutely. At the very beginning, when I started using these hedge trades, I didn't think about how to exit them again. I was just protecting me against my losing trades. But then it started becoming messy. If you trade, at the moment I'm looking at 9 different currency pairs. I'm only trading between 3 and 5. Usually I don't like taking correlating positions on at the same time. But if you are in 5 trades and they're all against you and you have 5 different hedges and you don't know how to exit the initial trades or the hedges, it can become messy and frustrating very quick. So I just wrote a basic strategy to decide when I close the hedge and when I enter it again. And at the moment, it's like you say, it suits me. That's something that's my style of trading. I like it, and that makes me continue.
Okay, well, let me ask you this. I see that you have a website under construction. When's it going to be launched, and what are you going to be offering on that website?
Yes, that's the website actually exists. I put it under construction because I'm working in the financial industry in Luxembourg. So my clients are investment funds. I'm working with a bank, and there's a potential conflict of interest that needs to be addressed. I can trade for my own account, and I manage money of my family, so savings of my family, and that's absolutely acceptable for my employer, as long as I disclose every transaction that I do to avoid fraud, because I have access to insider information.
Okay, what would, do you mind disclosing what bank you trade for?
Sorry, once again?
Huh?
Okay, can you repeat that once again? Sorry.
Do you mind disclosing what bank you trade for?
Yes, I'm disclosing on my forex trades. They're not so much concerned, but some of my clients are large investment funds.
No, I'm asking the name of the bank that you trade for. What bank do you trade for?
I'm actually with BNP Paribas.
Oh, okay. All right. Very high-end, excellent company. So, yeah, congratulations on that. So,
thank you.
You know, I guess the question would be, with a position like that, why even bother with retail? Unless it's just something you want to pass along and teach people, and there are a lot of people out there that need help from professional traders. Was that your goal? And so you're not going to launch this website? It's kind of offline for good now?
It's ready. I just need to switch
Talk to lawyers?
The construction mode. But my thoughts with that website is, because I know the background, I know how hard it is for retailers to invest their money, and what we do takes a lot of time, doing all this research, acquiring all this knowledge and experience, and many people have the desire to invest their savings, but they just have no time or no interest to learn all this stuff. And if you look at the investment fund market, it's hard to find the right fund that yields constantly, regularly, every year, etc. So I feel like there is a market for a copy trading or mirror trading service for small investors who don't have the capital to go to a private banker and let them manage their accounts, but we really want to do something more close to the market and not investing into large investment funds. So that's an idea I had in mind, but I said it's something that I'm exploring, and I'm in discussion with my employer to address the conflict of interest.
Okay, so you're kind of a long-term bear in the pound, and you think it's could be completing something here. Do you think the euro, the break that we had in the euro, may have been just the rally that we had from 103 to 121 was just a correction and an ongoing bear market? I want to wrap it with that. What your view is on euro here?
I think the euro is too high at the moment. I'm actually waiting for
115.
For a lot less. Let me just get the chart right. If I look on the long term, the euro, we can see that there are quite a lot of support levels around from 125 to let's say 120. Yeah. And the euro, it fall from a cliff from the 140s. It fall from a cliff and then bounced a little bit. We saw a little bit of consolidation. Now it rallied right into this resistance level. So I am looking at the RSI it's leaving on the weekly chart, on the monthly chart here. So if you look at the RSI, it was oversold right in this resistance area, and now leaving the oversold condition, which could be an indication for an end of this short-term up rally. So I am actually bearish on the euro as well.
It's also testing today's low, the 2-week off number. But that's a lesson for, that's what I teach. So very, very nice presentation, Laurent. I really appreciate your time. I didn't know that you were a bank trader, and it was a very interesting presentation for risk management, considering most people just go the other way. When they're wrong, they're out, and they look for the next trade. I've heard people say, my best trade is my next trade. So it was really a pleasure meeting you, and I wish you continued success, and may pips rain down on you. And I'm glad to call you my trading warrior brother. Very nice to have met you.
Same for me. Thanks so much. It was nice talking to you.
And you could follow Laurent at Lorber INV. That's correct. That's your Twitter handle, buddy?
Yes, that's right.
Okay, and thank you so much, buddy, and really glad that I found you on Twitter. Let's keep in touch, all right?
Absolutely.
Okay, buddy. Laurent Sharir, everyone, at Lorber Invest, humble guy, INV, Lorber, LORBERINV, and be a great follow for you guys, and that's why I bring guests in to help edify the community. And there's another way for you to consider managing risk. I've never had success with it. Once in a while I get lucky and lift the right leg, but obviously Laurent knows how to do it. So good hunting, everyone. Hope you had a great Thursday. I want to thank all the viewers from investing.com. And most of all, don't just count your pips, count your blessings. Thank you, Blake. Thank you, Nick, for stopping by today. Thank you, Steve. Thank you, Stell. Great Euro Pound trade, ForexAnalytix, and we'll see everyone tomorrow to wrap up the week. TGIF tomorrow, and we have a great interview tomorrow. The guy's pretty famous, Victor Zubarov. He's a GAN guy. He's one of those market wizard guys, so you don't want to miss Victor. And I'll see everyone tomorrow. Enjoy your summer day. You have 10 days left, I think, or less. See you, Simon. You're welcome, Kevin. Adios, my trading warrior brothers and sisters. And thanks again, Laurent.
All right. Thank you. Thanks, Dale.
Adios. Good hunting.